Good afternoon and welcome to Jesse Day Trades episode 6. Today's video is going to serve as a bit of a week in review based on how we did this last week. So overall, you can see on the trading log, we closed out the week with 4.39% profit, bringing us to a year-to-date return of 33.13%. With a daily average of 28.28% and $9 daily average profit. So far, we have about 74 trading days this year, and of those trading days, we've had 40 wins, only 3 losses, and 31 no trade days. So breaking down this last week, we opened the week on Monday with a 0.3% profit, and then went on to make more than that each day throughout the rest of the week for a total of 5 profitable days in a row last week. And our portfolio, we ended the week back above the $4,000 threshold. So not too bad. And overall, we've made just south of $700 so far. And again, that's just using simple addition with this right hand column here on our log. So not too bad. We have the 2 no trade weeks for the work trip, and before that, the week we had another 5 days in a row profit, 6.74, and then this week 4.39%. So it's not bad. My wife and I the other day were talking about what the profitability would look like with a little bit bigger portfolio, and we were doing some math. And we were seeing if we had a $20,000 portfolio yesterday, 1.32%. If we multiply it by 0.0132, that shows that 1.32% of 20,000 would be $264. So instead of $52 profit for just yesterday, it'd be $264. And then if we do that for the week scale at 4.39%, so 20,000 times 0.0439 would be almost $1,000 profit for the week. And if you do that times 4 weeks in a month, it'd be $3,512 if you had the same performance for 4 weeks in a row. It'd be about $3,512. And if you do that 12 months out of the year, it'd be $42,144 of profit. And that is not accounting for compound action. Okay. So this number here is assuming you're always just trading with $20,000 essentially. Okay. And this is just the profit you would get if you basically only worked with $20,000 each week. Okay. I'm going to show you this website that I really like called the calculator site. And I'm going to scroll up to the top so you can see the name, the calculator site. And I like to use the daily compound interest calculator, which you can get up at the top if you go to finance and then click compound interest daily. And let me get my calculator back up here. It does a lot of very useful calculations. What I like to do, so just working the example that I was just talking about, if you put in a principal amount of 20,000, interest rate 1% daily for 1 year, and then you can say include all days of the week, no, and then you can just select, I selected Monday, Tuesday, Wednesday, Thursday, so it's 4, so it's 4 1% days a week, roughly 4% a week. And then I have a starting date, I just selected Sunday the 19th, and then that way the first day will be this Monday, Tuesday, Wednesday, Thursday. So it'll be the first 4 days will be that week. And I calculated it. And then it gives you a nice little breakdown of your investment value at the end of that 1 year period. It shows you what days you excluded from your trade, the percent, the daily percent you're saying, and then the end date and your initial balance. And then it shows you your percent profit and everything. And then it's got a really nice earnings breakdown. You can go daily and it shows you. So see, there's like the 20th of April, the first day, which would be Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday. So it breaks it down all the way through your 1 year, week by week, which is really cool. That's the daily view. And then you can also do a weekly view, a monthly view, and a yearly view. Okay, so going back to the daily view, let's see how this breaks it down. Okay, and I'm going to show you the calculator, how what we were doing was not taking into account the effects of compounding numbers. Okay, so we start out with a $20,000 portfolio on day one. 20,000 plus 1%. So do plus 1% equals 20,200. All right. So that's what day one did. Earnings, $200. So you have an earnings column, you have a total earnings column, which is like a running total, and then you have your balance at the end of that day. So that at the end of day one, we're equal. 2,200, or sorry, 20,200, 20,200. Okay. But now, if we just added, okay, so 1% of 20,000 is 200. So let's add another 200. And that's effectively what we were doing when we were doing 20,000 plus 4% for a week of 4%. Okay, if that makes sense. So let me just do 20,000 times 0.04 equals 800. So we would have made, if we had a $20,000 account, we would have made $800 in a week of 1% per day for 4 days. Okay, but so that total would be 20,800. So I'll just type out 20,800 so we can see it over here. That's what the simple math would show us. Okay, but on this calculator, you see the total earnings. So the earnings for day one is 200, but then it's 202 because it's taking this balance, not the 20,000, but the 20,200, and it's adding 1% of that, which is 202 instead of 200. And then the next day, 204.02, and then 206.06. So now you can see you're making a whole extra $6.06 by that Friday because of the effects of compounding numbers. Okay, so instead of 20,800, you're having an account balance of $20,812.08. Okay, so it's not the biggest difference after 4 days, but again, that's still pretty impressive because that's an extra $12. That's an extra Subway sandwich for 1 week of compounding numbers. Okay, now let's go to the weekly view and pull our calculator up again. And if we're assuming we're making about 4% a week, then we can do 20,000 times 0.08, which would be 2 weeks of 4% a week, and we would have a profit of $1,600 using our simple math of 20,000. However, this is the weekly column. Week 2 total earnings is, oops, let me get my calculator back up, is showing $1,657.13. So now instead of just an extra $12, we have an extra $57. Now you're talking about, you're getting on the scale of a Subway sandwich a day for a week almost. Okay, so that's just 2 weeks in. Now let's do the 20,000 times 3 weeks, which would be 4 times 3 is 12, so that'd be times 0.12. So again, with the simple math, it'd be 2,400. But now, third week in, it's 2,536. So now we've made an extra $136. Okay, so you can really see the power of compounding numbers and how quickly, just 3 weeks in, you can be making an extra $100 because of the power of compounding numbers. Okay, another interesting one. Let's go. So this would be 3 weeks in, 4, 5, 6. Let's go 6 times 4 would be 0.24. So 20,000 times 0.24, 6 weeks in, 4,800. 1, 2, 3, 4, 5, 6. So by the end of the 6th week, we would be expecting to make 4,800, but really we're making almost 5,400. Okay, so that's an extra $600. Now think about that. That's almost an extra $1,000 in a month and a half time. Okay, so as you can clearly see, the power of compounding numbers really makes a difference when you're doing this kind of a strategy of reinvesting your entire portfolio during each trade. So if we scroll up to the top of our schedule here, you can kind of see this in action. Okay, so at the beginning of the year, we had a portfolio of $2,998. Okay, and let's say like 13 January, Tuesday, we made 0.58% profit with a portfolio of about $3,300. Okay, so 0.58% profit with that size portfolio was $18. Now let's scroll down a little bit, and actually we have an example right here. So as we go through time, we're making good trades and we're making some money, and we come down to another almost 0.58%. We're 0.57%. It's actually less than that first trade, but since we had a bigger portfolio value, that was worth more money than it used to be with a smaller portfolio. So you see, we made a bigger percent return here in terms of percentage points, but we had a smaller portfolio, so it was $18, but we made more money with a smaller percentage return because we had a bigger portfolio. And now, if you scroll down to this week, roughly the same percent, 0.59, is now $23. So that's a little micro view of the power of compounding numbers, and it'll only keep getting better and better as time goes on, assuming we keep making good entries and we keep our losses to a minimum. So here on Friday, March 20, we made a loss of negative 11.68%. So like I've discussed before, I really want to tighten down to have our losses less than, like, either equal or less than 3%. Because then ideally that's only about a week setback based on how our numbers are looking, where we're making in the range of 2 to 4 or more percent per week on average. Okay, so a 3% setback on a bad day isn't the end of the world. And if you look at, we've only lost 3 trades so far this year. If we keep those losses, like where we make a bad entry, to 3 or less percent, then that doesn't add up to much loss. Okay, so anyways, this video was supposed to be a week in recap video, but I wanted to show you guys the daily compound calculator and a little bit of some fun calculating, going over like what your money can turn into with the power of compounding numbers versus just doing simple math. But yeah, so thank you for watching. Please like, comment, and subscribe to help out this channel. We would really appreciate it. And once again, thank you for watching, and we'll see you in the next video.